This podcast is brought to you by PwC.
Hi, and welcome to PwC Switzerland's Family Office podcast, our review of topics of interest to family offices and the families behind them. This week, I'm delighted to be joined by Pascal Schneidinger from Partasio. So Pascal, let's jump straight in. Can you introduce yourself and your business in a few words?
Sure. So I'm from Zurich originally. I grew up here. I moved to the US for university. And after university, I spent quite a long time in investment banking and private equity in New York and in London. In 2011, I resigned and I moved to Shanghai and I started a home furnishing retail company based out of China. And I did this for about 10 years. And I came back to Zurich nearly 3 years ago to start Partasio. And the objective or the philosophy of Partasio is that we believe that most investors or most people are not sufficiently diversified when it comes to financial investments, and that real or professional diversification is actually very challenging for most people. So we're focusing on art as an asset class because art by now surely is the largest asset class that is actually still diversifying as opposed to most other asset classes. But due to the very special dynamics of the art market, the entry barriers are very high. So what we do is we enable people to, for the first time, via a simple but very professional investment solution, to get access to art as an asset class. And they do that via investing into small, diversified portfolios of top quality paintings.
It's a really interesting business idea. And I'd say a lot of the families we work with, when they're thinking about art, they're primarily thinking about something that they hang in their home. So how does what Partasio does fits in with that?
Well, I would say first and foremost, the way we look at it is an investment. But that being said, art is a cultural good, so there's a very strong emotional, cultural element to it too. But given that we look at it first as an investment, we try to analyze every opportunity very analytically. We look at where can we get the best risk-adjusted returns. But once we make an investment, we focus very much on the cultural and emotional part as well. So we build this emotional affinity around the investment, and we do that by providing a lot of educational content, by organizing events and exhibitions where we display the investments and where we talk about the actual paintings and their background. So I think it goes hand in hand, but I think it's important to emphasize that first it's an investment, second an emotional cultural approach.
And so how do you pick the pieces of art then, if you're taking an investment standpoint? Have you got people who are going around looking at pieces of art?
Sure. So the art market, like every other market, has many, many different segments, of course. We strongly believe that if you focus on art as an investment, you should exclusively or almost exclusively focus on the absolute top segment of the art market. So we only focus on paintings after 1945, primarily for due diligence and liquidity issues. But within that segment, we only focus on the most long-term and global relevant artists, because that's kind of like a value investing approach. So we focus on artists who have a long track record, who have relatively low volatility, low downside risk. And then once we have a subset of these artists, then we obviously try to find the absolute best works at the best prices.
And you mentioned before it's a diversification approach as well. So how does this then correlate with traditional investment markets?
So there are all these scientific analyses, how correlating or in fact non-correlating art is with other asset classes. But while I'm a very analytical person, I think one should really look at what happens in real life. And especially 2022 was a pretty good case study because, as you know, pretty much all asset classes correlated very strongly with each other, just in the wrong direction, unfortunately. But art, especially the top segment of the art market, performed quite well. And the reason for that is, in my opinion, people should look at what art does correlate with and not what art does not correlate with. So if you look at the demand side, art actually correlates very strongly with wealth. The more wealthy people you have, the greater the overall wealth is. Generally speaking, the higher the demand. But on the supply side, the dynamics are quite different. So if you look at top quality artists, usually these are people who are either not alive anymore or they are at a very advanced age. And that means that supply is stable to decreasing. And as a result, prices of top quality artworks have gone up in a quite solid fashion over the last many decades. And that is also the reason why it's not correlating, not because it has positive returns, of course, but because the dynamics are very different than most other asset classes.
Interesting. And in terms of the demand that you see then, is it from a particular geographical region? Is it families in Switzerland? Where's the demand coming from?
So I think it doesn't really depend on geography. The way we look at investors or target investors, we basically divide between people who have a very strong art affinity and people who don't have a particularly strong art affinity. And the experience we've made, which is actually not surprising, is that people who have a very strong art affinity, independent on what budget they're focusing on, whether it's really expensive paintings or cheap paintings, they're not so interested in what we're offering because they generally prefer, to go to galleries, to pick up the pieces themselves, hang them on their walls, and have control over the paintings.
Mm-hmm.
So most of our investors are either financial investors who couldn't care less whether the underlying asset is paintings or apples, to be honest, or it's people who are intellectually curious and interested in art, who go to museums once in a while, but they're not collectors per se. And for them, it's really interesting from a financial perspective, of course, but it's also interesting from a cultural, emotional aspect vis-a-vis buying stocks, for instance.
Got it. And what do you think, slight tangent, about being able to buy segments or pixels of art and NFTs? Is that a market that you see as being akin to what you're doing, or is it something totally different?
Well, there are many different aspects to that. So fractional ownership is a word that's been used a lot. I personally don't like that word very much because if you buy shares of a public company, you essentially also are a fractional owner of that company. So it's nothing new at all. I think it's a marketing word that has been utilized way too much. So in what we do, of course, you own also a fractional part of the paintings that are in the portfolio that you're invested in. So I do believe in it. When it comes to NFTs, again, there are many different ways of looking at it. We don't look at NFTs from an art perspective at the moment, although they may have reason to exist in the future. I think none of the NFTs that are around at the moment are long-term relevant, which is one of the parameters that we're looking at. So it's just not part of the categories we are focusing on.
Okay. So if you had one piece of advice for a family or family office looking in this space, what would it be?
So again, I think you need to differentiate whether you're interested in buying paintings because you want to hang them on your wall or whether you want to make an investment to diversify your financial portfolio. If you want to simply hang a painting or paintings on your wall, go for whatever you like, because it should not be a financial investment, and chances are it will be a really poor financial investment because the vast majority of paintings are probably not a good investment. If you look at it from a financial diversification perspective, then I really think you need to be very careful at what you're doing because the market is very opaque, it's very inefficient. So unless you work with people who have 100% alignment of interest with you, I would be very careful. And that's one of the things that we try to focus on and emphasize at Partasio. This way we are structured is 100% alignment of interest on all levels. So we only make money if our investors make money. Our art specialists are incentivized that deals are good. They're not allowed to work on anything else that could in any way compete with anything that Partasio does. So alignment of interest is very, very important in a very opaque market.
And last question. If you had unlimited money at your hands, what art investment would you make? Assuming, obviously, you'd have some in Partasio. But what would be the one piece that would be of interest to you?
So you're asking from a financial perspective?
However you would like to answer.
Well, if I had unlimited funds available, I would do both. I would buy paintings that I just like because money clearly is not important because I have unlimited funds. From an investment perspective, I would certainly focus on artists who are relevant, that will be around for the next 5, 10, 20, 30 years in reality, and that have a clear market. Because I think the danger in buying art from an investment perspective is really that, again, given the dynamics of the art market, it could be very volatile and very risky if you don't have the right approach.
Mm-hmm. Thank you. Pascal, it's been a pleasure to speak to you today, and we look forward to speaking to you soon.
Likewise, thank you very much.
Thanks.
This podcast was brought to you by PwC. PwC.ch